I wanted to share the biggest lesson I took away from Money Master the Game. So of course, it's very big on index funds. So some of you say that it's fluff, but I think he's just driving the point home to get people to take the action. And I was like, okay, great. If I have the index part down, what can I pair with it to potentially get an edge? So I was like, okay, great. If I get a tech index and then I get an S&P index, if I pair 2 tech stocks with it, and this is my breakthrough in 2016, I was like, okay, great. I can beat the market by still investing in the market and buying the best 2 tech companies. So here you are. VOO, QQQ, Apple, and let's take out Microsoft and do Google. And we do equal weighting of 25% across the board. And look at the return is from 2010 to 2020. It's a simple formula. Now, if all of a sudden tech is no longer the hot thing and electric vehicles sets the world on fire and we have the second coming of Ford, great, you can go heavy there. But tech is going to be a major player, at least for the next 100 years. It's an easy formula to follow if you don't want to waste time, because the longer you take to start to build your positions, and Rashad, you can touch on this too when I'm done rambling. But one of the biggest mistakes and one of the biggest reasons people don't have enough money for retirement because they get started too late, especially traders. Traders, we spend all this time studying patterns and dojis and double hammers and double tops, and it's like, shit, put some money in the market for 5 years and let it run. Let it run. So I want to show you an illustration, and you can go to any portfolio analyzer and you'll be able to see this as well for yourself. And I hope that was helpful for you. So what happened today was indicative, like I said, of what happened in 2016. And of course, Dow hit 30,000, which was a key psychological number. And then it slid down from there. Tomorrow, we probably will slide down either tomorrow or Wednesday. We'll recalibrate and then go back up. And that's that. So I'm going to dive into these questions real quick. Do I think that the Dow would drop to 5,000 now that Biden is in office? If the Dow goes to 5,000 while we doing Market Mondays, I will pick one of you guys and give you $5,000.
Who asked that question?
One of my guys, David, like somebody asked him, like, well, Biden's in, do you think the market to go to 5? I laughed literally for like 45 seconds in the phone. Like
if the market goes to 5,000,
that's it. We'll be living in the Walking Dead era.
That's it.
World's over.
Good night.
The world's over. Good night, ladies and gentlemen.
We didn't even drop 50% February to March and the world went to hell. I'm like, you think we're going to go to 5,000? No,
it's over. It's over.
Grand opening, grand closing.
Extinction level. Aliens will have to come.
Yeah, extinction level
event.
Part 2.
Kudos to Busta. What are your thoughts on NIO? Man, I love the chart, but I hate the fundamentals.
Okay.
I hate the fundamentals. Like the chart isn't. So for those of you who are in it, ride it until the wheels fall off, especially for those of you that got in like at 11 or 9. I may take some off the table if it drops back to 36. I love the chart. It's a trader's dream. But when you look at the business has improved, I just don't like some of the metrics that I see in front of me at the moment. Will it turn over? Maybe. But while I'm looking at it, I don't like when stocks run up this much and then the fundamentals are not strong. And for everyone who's investing in trading, who keep asking, is it fundamentals or technicals? It is both. They are baked in. This is 1920. There was a huge information gap when it was technical analysis versus fundamentals. They are tied in together now. So
yeah, shout out to everybody in here. They're saying like they got it. I got a really quick story about NIO, and I was just learning about options at the time. This is like early June.
Fire away.
I had my young boy, shout out to Abdullah, shout out to Jamal. We all was sitting down trying to figure these things out. And I was like, I think we had just did a Market Mondays and it was like, why look for the next Tesla when Tesla's here? And I was like, okay. And at the time, I think NIO was like $7.89. And I was like, you know what? I'm gonna get a $10 option call on it. I'm like, if it can't move $2 in 2 years, then it's a small loss. And I didn't do it, but he did. So he's like 23 years old, and he did it. He did, and I called him next day. He was like, "Yo, I got that $10 call for like 22 for January 22 or something like that." I'm like, "Oh, you did it? Wow, great!" And then he got nervous when it hit 15 and it pulled back to 12 and sold it. And so I called him the other day. I'm like, "Yo, you ever kept any of that? Because it's at 42 now." And he was like, "Nah, I'm scared. I'm killing myself." I said, "Nah, man, there's some lessons, and this is valuable. There's some lessons, even that what I say and Shadi says and Ian says that you're gonna have to learn on your own.
Yeah.
So that's one of those things, and like patience is one of those things, and doing your homework and knowing your research and trusting yourself. And so those are the things that we can't teach that you'll have to learn on your own.
If you guys want to know where the market is going to go, I want you to go to a previous episode, and we're not going to tell you which one it is. It's one of the earlier episodes where I broke down fib retracements. If you don't know where the market is going to go, so I can't give you my crystal ball, but I can give you a couple glass flakes off of it. You can put on fib retracements and see where the market is going to go, and it's going to give you a mathematical calculation. So for all of you that are in NEO and you don't know how high it's going to run up, please put those on, but I'll give you a projection at the end of the night if we do this rapid fire round. And the last question, are we still at risk of a possible recession? I read somewhere that because tech was reaching all-time highs, we aren't really in a recession because recessions don't recover that quick. Listen, I'll tell you in 2020 that anything is possible, but we are out of recession territory. It does not mean that the economy is better, especially for African Americans and Latinos. As far as the actual stock market, we are out of recession territories and back into bullish territory. And for those of you who missed out, I'll tell you from personal experience, for me, when the last recession came and I had no clue what to do. Like I didn't know a moving average from a candlestick, right? I made sure that when the next one came, I was very prepared and there wasn't this much information being shared freely every damn day. So dive in deep and set your levels for where you want to buy. But also, if you're averaging into the market, into good positions, once the market does actually crash or dip, you've already built up enough courage from doing it every month to then go in heavy. A lot of people are going to wait 4 years for the next dip. And when it happens, the same thing is going to play out. You're not going to buy because everyone's going to talk you out of it, or you're going to be too afraid to. So build up that muscle now so you can begin to get the positions and take advantage of the market falling. And lastly, should I take my money out of my 401k to trade if I need more income? No. Unless you're just
full answer.
Short answer.
One of the baddest traders to walk the earth. But honestly, if you were, you wouldn't ask that question. And I say this out of love, and I was talking about this on Clubhouse. I know someone that took their retirement money out in March. They put money into trade in April. They gave away 14 years worth of gains in 2 months trying to trade because they didn't want to practice. But everybody wants to trade. No one wants to study. And as a result, she got fired later, and now she's really struggling. I'm begging you guys, stop playing with your retirement money. They should be in separate buckets. You need your long-term account. If you're going to swing trade, you need a swing trading account. And then if you're going to trade, you need a trading account. You can't have your money slushing together, because at some point you're going to be like, nope, I know Hertz is going to work. Screw what Ian and Rashad talking about. I'm going to buy the 222. And then the guy get in the back of the car and laugh at you again. So I'm begging you, please don't do that.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.